YouTube. I am so incredibly blessed to be back here and give y'all some more sauce about my passion, obviously day trading. I'm gonna get straight into it. This is gonna be a video about the best entry model so far that I have ever seen. I've been using it myself. It's real consistent and it's easy to catch on. So I'm gonna do an edit in 3 seconds. The lights are gonna be different and we're gonna be doing some chart work. So 3, 2, 1. All right, y'all. So here we are. I'm gonna go ahead and get into first what is an inverse fair value gap. An inverse fair value gap is when, let's see if I can make a little bit of a demonstration for you guys. So let's say we're going down, right? As we're going down, we end up creating a gap. The gap is right here. Since it's bearish, we're gonna make it a red gap. I want everyone to see this, right? So 1 candle, 2 candle, 3 candle. We have a series of candles, right? We've created a gap. Now, let's say the next minute, we go up. And the next minute after that one, we go up even more. Close right there above this gap that we had already created in the series of downward candles. And guess what we have? We have an inverse fair value gap. Chance, why are you showing me this? I already know what this is. Or Chance, why is this important? I have an answer for both of those. This is perfect. For the people who already know, sit back, relax. We're going to get into more deeper context soon. For the people who don't know and wonder why this is valuable because this usually can show changes of momentum and changes in direction, and you can usually bottom or top tick if you have the correct context. You cannot take inverses randomly. You need context, okay? That's going to be in later videos. Right now, we're going over the entry model of an inverse fair value gap. Now that you guys have gotten an example, I'm going to show you a real on the field, on the charts example right about now. So let's go search for one. We can probably find a solid one. All right, y'all. We've got our example. We've got our real chart example. We've got our on the field experience example. I'm going to show you guys an IFVG on a real NQ market. This was Wednesday, October 15th, 2025. All right. Looks like this one happened at about 1, 2. So this was a nice little PM play. As you can see, what we have here, we have essentially an unfilled gap, and we also have equal lows. This is extremely important, okay? We have equal lows. It's a form of liquidity. That's where we use context to find where we use this entry model. You don't just use the entry model anywhere. You need context. You need high time frame context. Once again, later video, it'll come. So let's see what happens when we end up sweeping these equal lows, also pumping into this 1 hour unfilled. Let's see if there's a 4 hour gap as well. Okay, also an unfilled 4 hour gap. A lot of bullish confluences, a lot of bullish signs. Let's go on the 1 minute. And seems to be I probably had already taken this trade, had the idea. So boom. Turn off this trading sessions. This is our form of liquidity, okay? Let's go back on the high time frame. I'm going to mark it out so you guys can see it. Let's put equal lows. Let me do that. Equal lows. Now let's go to the 1 minute. We swept our equal lows on the 1 minute. And guess what we had? 1, 2, 3. A down series of candles, okay? And through that down series of candles, what did we leave? A gap. That's not the end all be all though. Okay? It's not the end all be all. Let's go ahead and go back a little bit. We create our down series, right? We sweep liquidity as well while we're taking that down series. 1 candle up. Damn, so we already basically inversed it. We didn't inverse yet, so we do not enter yet, okay? We do not enter yet. Okay, now we enter. Now we enter. Okay, why are we entering? Because we have high time frame context. We have high time frame context with equal lows, with a 1 hour unfilled, and a 4 hour unfilled. Okay, now this is not a perfect, super perfect A plus setup. I'd give it probably like a low A minus, so like a 90 to an 89 to a 90, because there's no high time frame swing low or high. Those are my favorite. There's no data wick and there's no session sweep. But we do have equal lows and we have displaced a decent amount, so we're obviously going to look to make some of that money back and come back up. Another reason I like this is because when we inversed, we brought a lot of volume with us. 46 points up, 23 points up. We moved a solid 64 points in about 2 minutes. So, and you're probably wondering, where do I see that? You're going to want to go ahead and look at the top corner, top left corner, and it's right where you see 24,666, 24,714, 24,663, all the way to the right. And when it says plus 45 or minus something, that's the amount of change the candle had. That's the amount of movement or points we had moved within that candle. A lot of volume with this candle, a lot of volume with this inverse. One more thing about the IFVG, we have to have a lot of momentum. We cannot wait. I give it 5 minutes, but even within 5 minutes, it's like once we get to that third minute and we have an inverse, I'm starting to be like, okay, I'm looking at you a little different, to be honest. So let's go ahead and get this example over with. Extremely volatile play. So what I would do is I would probably de-risk, maybe go five micros. I'm trying to protect all those express accounts. Obviously for people who are on combines, you could maybe go one mini. Save yourself if you're interested in that. Not two here, probably not two. I wouldn't go two. So high time frame context is equal lows. We get our 1 minute inverse fair value gap, perfect V shape. Let's just see it play out. And as you can see, the inverse fair value gap goes out to play. The reason I said de-risk is because if I was in this trade, I would want to take a $720 stop loss. I am not cool with taking a mini and going 1,400 stop loss. I'm not cool. In this case scenario, I would have made bank, obviously, but in the case scenario it fails, you always have to be protected. You always have to understand what you're risking. That's a part of being a good trader. So even with five micros, let's say you're targeting 100 points. Let's say you're targeting this right here. You're targeting this level right here, right? Let's say it's a you're in a 15 minute, so you want to just fill this 15 minute. All right, that's cool. You fill the 15 minute with five micros, that's 1560 on the day. So that's real good. High time frame context on top of a 1 minute inverse fair value gap. This entry model is super precise, super clean. We're not done yet though. You thought we were done? No, I care about all of you. No. We're gonna go ahead and get into one more example. I really hope I don't have to redo this and this is not muted and that you guys can see my screen. If you can't, I would be super hurt. That's neither here or there. If you're seeing this, it went perfect. Let's get to the next example. Light's gonna be different too. Watch. Actually, no, they're not. I'm crazy. I'm not gonna change them. All right, y'all. So let's get straight into this one. I like this one. But the reason I like it is because there's a teaching point, and it's really interesting as to how it can go both ways and how you always. It really just matters the type of trader you are and what you rather be in the way you rather enter. So let's just go ahead and get into it. Obviously, as you can see, we have London low right here. This is going to be A plus. If we end up sweeping and inversing it, obviously we will. It's an example. So, but this is an A plus setup because session sweeps, high time frame swing lows inside of high time frame gaps, high time frame swing lows and highs inside of high time frame gaps. And for the third A plus criteria, data wicks. I've fallen in love with data wicks. So I'd say those are the three big ones that I'm always looking for. So let's go ahead and see if we can sweep session low. Okay, we do. Sorry, it was so quick. As we're sweeping session low though, guess what we created? A down series of candles. Okay? We create a down series of candles, right? And through that down series, we create an inverse fair value gap. Once we come up above it. Above the gap, I'm sorry. Let me rephrase that. We create a down series of candles, we leave a bearish gap, and we inverse it. This looks like a solid V shape. One candle, two candles. Let me go back so you guys can really see. We end up sweeping. Leave our gap right here. End up sweeping London. Leave our gap right here. One candle. Two candle. Boom. That's where we inverse. This is A plus criteria. You would obviously have to leave, once again, your stops at protected low. That's what I'm doing from here on out. But once again, high time frame context, the session low mixed with low time frame entry model, the inverse fair value gap on the 1 minute. Now, the reason I chose this example is because things get interesting. Me personally, I've also evolved to the 30-second. So the first inverse I see after sweeping a high time frame liquidity zone area, I'm getting into. You understand? I'm gonna try and get into it. With this play, We end up having a 2-minute gap as well for this down series, right? So I'm gonna move this one that we already inversed. Let's look at this one, right? Let's say you see this and you're like, okay, I don't want to take the trade here. All right, that's fine. Cool. Cool. Let's see how the 1 minute play would have played out if we got in off the first exact inverse. Let's see how it would have played out. Got into a little bit of drawdown. You would have had to hold, but if you kept that protected low, you would have looked good. All right. Now, let's go to this 2-minute inverse play. Let's go to this 2-minute inverse play. Let's see how that played out. Let's say you wanted to wait for the 2 minute to get inversed. The question for me is, though, you're so far up the range, where do you put your stop loss? That's the dilemma I run into, right? So it's like, the way I think of it, if we are going to sweep, and my idea is we're going to sweep, I might as well get in on the lowest inverse or the first inverse, because I'm gonna have the best risk. I'm gonna be protected. I'm not gonna have to go and take and trade up the range, because even if we do come back and look for a little bit of resistance, me have a little bit of resistance, I'll still be fine because I entered here, right? And not here. It's a big difference. So this entry model is supposed to be used on the 1 through 5 minute. It can be used on high time frames. Obviously, that's cool. But you want to use this entry model on either the 30-second or the 1 through 5 minute, I'd say. And try and take the first inverse fair value gap you see once we sweep a high zone, a high liquidity zone, right? So, of course, go ahead, set your TP. TP would probably be, is that London High? It's not London High. I would take this TP though. I would make this the TP right here. It's obvious. It's an obvious magnet. Let's see it play out. Ends up smacking, and you're done for the day. Once again, a session sweep and a 1 minute inverse right here. You're done. Sit through some drawdown. Let's say you took it with 5 micros. Max loss would have been $377, and you're shooting for $1,270. Yes, that's a solid 1 to 3.3. That's how you stay consistent. Always take the first inverse. Try to, okay, guys? Because you see where the 2 minute got you. You're going to have to put an 800-point stop loss, and your TP is it's not going to be the same. Always take the first inverse you see, whether it's the 30-second or the 1 minute. If it's a 2 minute as well, take that too. But don't let it get too far up the range, because that's where things get scary, all right, guys? This entry model is clear, concise, and I wanted to give you guys the sauce. Ask me questions, give me suggestions. What do you want to hear? What do you want to know? Excuse me. What can I work on? What can I improve on? You want me to let you know what you can improve on? Perfect. Just trying to build a community out there. Discord is gonna be in the bio as always. What else? I'm thankful that I'm on this platform spreading knowledge. I'm thankful that you guys tap in, whether it's 1, 2, 3, or 1 million people. I'm just here to grow, and I'm here to put on for my family and my friends. So with that being said, I'll see y'all tomorrow. Thank y'all for tuning in, and it's been Chance, man. I'll catch up with y'all.